I'm inclined to start meetings on time. I'd prefer to go ahead and start.
Okay, that's how I feel too. So thank you. Good afternoon, everyone. So my name is Michael Lafayette, and I am legal counsel to RAR and CVR MLS, Central Virginia. Also fortunate to be legal counsel to Lynchburg, New River, South Side, South Central. Also give legal advice to a couple other associations. So I think I have 10 now. Anyway, so pleased to be here today. So what we're going to do is review the CVR MLS forms, the key forms today, and also answer any questions that you have. So this way you have a full understanding of the forms. What I'd like to do before I get started is kind of just get a feeling from those in attendance today of for the forms. Are you looking for information because offers, you have received some offers on CVRMLS forms, or maybe making some offers in a Richmond area that they've asked you to use the form? I'm just trying to, it would help me to help you today if you can kind of let me know the uses of the forms that you have or anticipate. And if you want to unmute and let me know that, that'd be great.
Um, my name is Jennifer Mitchell, and how I use the forms is basically I find out what contracts that the other party is familiar with, and especially in the Richmond area, that's what they're familiar with. So more than likely my offer would be, if it's within reason, would be accepted rather than another one. I mean, they should take any offer and read through anything, but the reality of it is if they're not familiar, they're not going to take the offer, right? So that's why we want these forms. Uh,
Great.
Another thing is I know there's a bunch of law changes July 1st, so I'm kind of familiar with the forms since I am a part of CVR MLS, but I just want to know if there's any changes that we need to know about that's coming up also.
Yes, great. Well, yeah, thank you for both comments there, Jennifer. And yes, I will review with you the specific changes to the purchase agreement that are effective as of tomorrow. So the new forms go online tomorrow. The new updated purchase agreement goes online tomorrow. So thank you for that. Anyone else?
I will go. Two things. One is I'm seeing a lot more Richmond agents in the Williamsburg market with the data share with Rain.
Okay.
And so I'd like to welcome them and their contract.
Okay.
And secondly, I am a little frustrated with the Virginia Realtors forms that I've been using for a very long time, with it having to do with the commission compensation paragraphs missing.
Okay.
And on the contract, they're just things that are holes that we need to tighten up on. And CBR has great forms. I've been to
Okay.
your form classes before.
Well, great. Well, thank you, Nan. Appreciate
Mhm.
that. And we'll go over those things today too. So appreciate that. All right. Anyone else that have anything you want me to know before I start?
I'll just point out that we recently added the CVR forms to the forms library within
Oh,
Transaction Desk. And so our members now have a choice of using the VAR forms and or the CVR forms.
okay, great. Thank you for that, Charlie. So that's wonderful. Yeah, so what I'll do is I'm going to review the forms. Keep in mind what you had just mentioned here, but we'll give you a full review of the forms. I want to make this also as interactive as possible. So what I'll do is break periodically and ask if there's any questions. And then we're a small group, so it'd be perfectly fine just to unmute and ask your question. And if there's two persons asking, one, we'll just take them in order. But that's what we'll do. So again, I'll take any questions as we walk through the forms. That way you have, again, have any questions. I think Jennifer's comment about offers being made, I think, and using the CVR MLS form does make sense in the market. I will just tell you, I don't know if the right terminology is called penetration or use of forms, but for our members, we have 7,000 CVR MLS members, and RAR members, a little over, I think it's 6,200. the use of the RAR forms, or excuse me, the CVR MLS forms, RAR members is like 99.9, it's almost 100%. There's only literally a few that use VR forms. So everyone, it is absolutely saturated. The market just uses the CVR MLS form. So it's a great point that you've made about that in our marketplace and what's people familiar. And I say this as no disrespect to VR, but no one uses the VR forms in our Central Virginia region other than a couple people. And so I'll just tell you, our members are not familiar with them. So I think it's very savvy of you to learn the form, if you're going to make an offer in in the area. So all that is good. Also, to Nan's point, I think we are able to address things on the CVR MLS forms kind of proactively. Richmond is very proactive. When I say Richmond, I kind of use that interchangeable with CVR MLS. And by the way, to let you know the difference, RAR and Southside Virginia Association Realtors, sorry, couldn't spit it out, um, both own CVR MLS. So RAR owns 90% of CVR MLS and Southside owns 10%. So that's how it's made up. So CVR MLS is a realtor-owned MLS, and it's owned by the two associations. So also just wanted to let you know that. So that way, if anyone was wondering, so it is a realtor-owned associate, as in real estate association owned, not a broker-owned. MLS, I should say. So anyway, that's kind of the background. So Charlie, am I allowed to share screen at this point? Or if you can make me, great. So what I'm going to do is share my screen, and then here we go. And thumbs up if you can see the purchase agreement up on your screen. Can everyone see that? Okay, great. Thank you for doing that. So what I'm going to do is scroll through the forms and go through them in somewhat good detail with you. As they said, I will break as I get to after several paragraphs at a time. So I won't wait till the whole end, but I'll do several paragraphs and then ask if there's any questions and then move on. Is how we'll do it. And then there are other forms other than the purchase agreement that we're going to review today also. But we'll start off with the purchase agreement because it is certainly the one that you'll probably be using the most or reviewing the most. So in this particular one, obviously the stuff that is self-evident, I won't waste your time on today about putting in the names of the parties and the legal descriptions, etc. The only thing I would say with us is just from a binding standpoint for real estate, please do be mindful of the city and county. As you know, there's a Richmond City, there's also a Richmond County, and there's a couple other overlaps like that. So please do put the locality, the correct jurisdiction. For the legal description, we in the Central Virginia, and what I teach is, so long as you have the tax parcel number and the address in the city or county, if you don't have the legal description, it's still a binding contract. If you happen to have the legal description, then certainly you can put that in. What I'm talking about is the lot block section number. But if you don't have it, just as long as you have the city, county, the tax parcel number, and the property address, then you're good to go. You may want to review the personal property paragraph items that are included because that does vary from realtor form to realtor form. So what we have in ours, including all the basic stuff like the carpet and curtain rods and attic fans and all that good stuff. But you'll see for appliances, right over here, we have range, oven, and dishwasher. That's all we have in ours because those are traditionally the built-in. So if your transaction wants to include, if there is a countertop microwave or refrigerator, you need to write those in as additional items included. So be sure to do that. Also, when it comes to technology, we do not list technology in our paragraph number 2 because technology is ever changing. We literally would probably have to update our contract every month if we try to include the names of all technologies. And what I'm talking about is like Ring and everything else that's electronic. So how I teach this and what I tell you and I tell our members is that if there's any electronics that you want included in the offer, then write it in. Don't assume that Ring is coming, or don't assume that cameras or anything that are mounted are coming because they're so easily detachable, and most things are now wireless, and so they're not affixed. And so then the question would be, are they enclosed or included or not included? So if you have a buyer who wants to include the technology, what I call technology, any kind of electronic equipment, please do include it in paragraph number 2 here. So that way there's no misunderstanding as to what the offer is and that it also includes the electronics. Paragraph number 3 is just a selection for addenda that is included with the offer. If you have to do additional addendums after the fact, you don't have to come back here and add to it. But for instance, if it's an as-is addendum or possession by seller agreement, those are 2 very popular ones in our area. You can check it off and that way they know it is attached. Then we come to paragraph 4. What we've done with paragraph 4, it says purchase price, but it's really the purchase price plus financing. It's just everything to do with the money, kind of nicely, succinctly put into one paragraph. So of course you would put in the amount of the offer right up here under the purchase price, and that is pretty straightforward. And then you select just one or the other. Is it cash or is it financing? So the first box here is this agreement is not subject to financing, lender financing. Purchaser basically, pays all cash at settlement right over here. So if it's all cash offer, really simple, just check that box. If there's going to be lender financing, then of course you would check the second box. And then we have a list of different types of lenders available out there. That way it's informing also the seller the type of loan that the purchaser would be looking for. If there's more than one, because they don't know, for instance, if they're going to do VA or FHA, then you can check both. And then it comes down to, we have other. Some people use these hard money lenders, which are private lenders, and you can describe that. And then it also is the amount of the loan. We have percentage or the loan amount itself. Most of our members use percentage like 90% or 80%, because if you put a percentage in, then you don't have to keep changing, what the loan amount is. Because of course, as you're going back and forth negotiating, 80% of the number that keeps changing in purchase price is still 80%. So you don't have to change the loan amount because you haven't inserted it. Versus if you put the loan amount in and that keeps changing based upon your offer, it's just more work to do. So that's why most people just use the percentage of the purchase price. And then what we have when there's financing is fixed rate, adjustable rate not exceeding, so fixed rate not exceeding, adjustable rate not exceeding, or the prevailing rate of interest. And of course, if you have a first-time home buyer or someone who's not too sophisticated, I recommend, fixed rate not exceeding as what they should put in for their offer. And that is because if at the time of loan application, they're not able to get an interest rate that meets or exceeds the rate they have there, then they can terminate the contract at that point. And that's particularly important with a first-time home buyer or someone who's not too sophisticated because they may have a cap on what they can afford. So this is a great opportunity to put in a cap. So let's just say, for instance, right now the cap would be 7%. You would just say fixed rate not exceeding 7%. And if at the time of loan application they cannot get 7%, then they're allowed to terminate the contract. Okay. You also can do, adjustable rate not exceeding for item number 2. Item number 3 is the prevailing rate of interest at the time of settlement. That means there is no cap. So that means that your purchaser is making an offer and it's not subject to any cap on the interest rate. So it's still subject to getting a loan, but not at any particular interest rate. So typically I recommend using prevailing rate when you have someone who has already purchased property before, so that this is not their first rodeo and they understand, they've checked out their credit, they're good. Also, in a competitive market, say you have multiple offers and you want to have your offer try to be a little bit better than the other offer. If you were to submit an offer that's subject to financing already, that makes it a little tougher because with all the cash offers out there. So if you're going to make it subject to financing, perhaps you don't put a fixed rate cap on it. If your buyer has already checked out their credit and they know they have good credit and they're not worried about the loan amount, then you could just select at the prevailing rate. And what that does is send the message to the seller, hey, my offer here is subject to financing, but I'm not going to try to terminate the contract because I didn't get the rate I wanted. So that makes it a stronger offer, even though it's still subject to financing, because there's no right of termination if you don't get a certain rate. So I find that in our marketplace, and particularly again in the multiple offer situation, that's what a lot of agents use is check prevailing rate. And this is, of course, in consultation with your buyer client because they're the ones who have to, approve what are the terms of the contract. But just something to consider particularly in a multiple offer situation, and particularly where that particular buyer is savvy enough and has, gotten pre-qualified and they understand having no cap, what that means. All right, so moving on. So again, you'll select whether it's all cash or lender financing, the percentage of the financing if it is, and then one of the interest rates. And then here we insert the number of years, which is typically 30 years, is what the loans can be amortized for, and then the total number of points. And that can be discount and origination points. So if the client doesn't want to pay any points, you would, of course, insert 0. They're willing to pay up to 1 or 2, you insert the number. Don't leave it blank, because blank basically means unlimited, means you haven't paid attention to it. So if they don't want to pay any points, it would be 0. If there's an assumable mortgage, then we have language here for assumable mortgages. I don't see many assumable mortgages anymore because it seems like all rates down have gone down over the years. Not that they've started to tick back up since COVID. We may see some people start doing assumable or getting, assuming someone else's loan, but I just haven't seen it around. Now, 2 paragraphs when it comes to actually what happens next after you fill this out. And it says if this agreement is not conditioned upon financing, i.e. all cash, then we have a verification process with this paragraph. What it says is that the purchaser shall provide seller with written verification from the third party in possession of purchaser's assets within 7 days that the purchaser has sufficient assets to pay the balance of the purchase price. So just like it sounds. So that is either getting a bank statement that shows they have the cash, or a brokerage statement, or a combination of both. Or could even be a letter from the bank saying they have sufficient cash on deposit to pay the purchase price. Now, if you're going to use a bank statement or brokerage account or any combination, you don't need to include the account number. I tell people, exit out, cross it off. You don't need to give the personal identifiable information, but the bank statement obviously should have the bank balance and the parties' names to it to show that it is really the purchaser's information. And so this should be provided within 7 days. Now, like anything in the contract, just about everything except for the homeowners association and condo association, some of those things are not negotiable because they're by law, but most of the time periods in this contract are negotiable. So for instance, you don't like 7 days and you want to adjust that up or low, you certainly can. But by default, we have always had 7 days in order to turn that in, and that's worked pretty well. So whether you're a listing agent, you want to make sure your buyer, the buyer has the cash on hand, or if you're the buyer's agent, you want to make sure your buyer has the cash on hand so that way closing's not delayed. So just realize it's a 7-day period of time that the buyer has to provide that written verification. Now, if the agreement is not conditioned so in other words, it is conditioned on lender. I was going to say not conditioned on cash, but it is lender financing. Then the second paragraph applies. So if it's not cash, but it's lender financing, then the purchaser has to go ahead and apply for that loan within 7 days. Okay, so they need to make loan application within 7 days of the date of ratification. And the date of ratification is the date that this agreement is fully signed, any initials it had, whatever needs to be done, and then the contract is exchanged. So that's the date of ratification. And then the buyer's under the requirement to use diligent effort to obtain the written loan commitment by the settlement date. Okay, here's what I want you to pay very close attention to, this second sentence. Okay, let me see if I can highlight it. If at the time of such loan application, purchaser chooses not to lock in the rates and/or points that meet or exceed the requirements set forth in paragraph 4, purchaser waives such rate and point contingency and accepts the rate and/or points available to the purchaser basically at the time of application. So this second sentence is it's a big deal, right? Because if at the time of loan application, the purchaser doesn't lock in, then they are waiving this cap right over here. So let me give you an example. Let's just say the purchaser went today. Today was the date of ratification, and they just went right away to the lender today. And the lender says, okay, we can give you 6.75, but for the rate cap, it was 7%. And the purchaser says, okay, great, 675. I don't know. I don't close for 45 days. I think rates are going to come down in the next 45 days. I'm not going to lock in. So of course, 7%, which was the cap, 6.75 is better than that, but they chose not to lock in. By choosing not to lock in, now they are waiving that 7% cap in my example. They're waiving it. So if rates were to go up between now and the next 45 days and even go over 7%, it doesn't matter. The buyer has waived that cap because of the second sentence. Okay, so make sure your buyers understand that. If they go to apply and they can get a rate that is equal to or less than the cap and they choose not to lock in, then they are waiving that cap in paragraph 4. Now, we also say the purchaser may seek lender financing that is different than the loan type specified above, so long as settlement is not delayed and there's no cost to seller. Purchaser's failure to obtain such alternative lender financing does not relieve purchaser from the obligations to obtain the lender financing specified above. So what does that mean? That means if you checked FHA, but then the purchaser said, you know what, I'm going to go VA. So long as closing is not delayed and there's no cost to the seller, then the purchaser can go ahead and convert to the VA loan and go ahead and close. However, if switching to the VA loan means there's going to be delay, then the buyer is prohibited from switching to that loan, to the VA loan, because closing is delayed, unless there was going to be an addendum and the parties agree for the VA funding and to delay closing. So the parties can always mutually agree to extend, but if the seller does not agree, then the purchaser would not have the right to switch to VA loan and delay closing. They would have to close under the original terms of the contract, which was FHA, and close on time. Okay, now as far as the rest of paragraph 4, it says if any purchaser fails to comply with the provisions of this paragraph 4 or doesn't get their loan commitment by settlement, then the seller can terminate the agreement. We also talk about diligent effort. Diligent effort means that the purchaser has provided all information and documentation requested by the lender within 7 days of each request, okay, and paid all costs associated with the loan application, whether application fees, credit reports, or whatever. And then lastly, it says purchaser authorizes the lender to disclose to the listing broker and the buyer broker information about the progress of purchaser's loan and application and whether or not the purchaser's done what they're supposed to do. So if you ever have a lender, if you're the listing agent and you have a lender, and you call the buyer's lender just to get a status report, and the lender says, I can't talk to you, I can't talk to you, you don't have written consent. You're like, oh, yes, we do. Go to paragraph 4 of the contract. The purchaser has specifically authorized you to discuss the status of the loan application. I mean, not to get their credit history or their credit report, but to discuss the status of their loan approval, and they can discuss it with you. So a lot of Richmond area lenders already know this paragraph, and so they'll readily talk to if they know you're connected to the transaction. You may be dealing with a lender who's not familiar with the CVR MLS contract, and so you may have to point that out to them that they're actually authorized to talk with you about the status of the purchaser's loan application. So we've had this in our contract many years, and it works really well. So this way you don't have to run around and get authority from the client in order to find out the status of the loan application. Okay. So with that, I'm going to pause because paragraph 4 is one of the bigger paragraphs. Even though it's not all that long, to me, it's one of the most important paragraphs we have in our contract because there's so much in there. It's about price and financing. So let me just pause and see if anyone has any questions. If you do have questions, just go ahead and unmute and ask your question.
I have questions on 2 paragraphs, actually.
Okay.
You went ahead, so I didn't stop you. Paragraph 2.
Yep.
With all the items in the, if you can show everybody. So just in case they have the same questions too. I think it's paragraph 2. So if, for example, like a lot of houses, sometimes when they're vacant, they pull out the blinds and curtains. Should we be also crossing those out there?
Yeah. So if the seller is going to take anything with them
Mm-hmm.
and not leave it, and particularly if the house has an open house where everything is there, then they can't, under our contract, if it's there at the time of the open house or when the showing occurs, even if they don't have an open house, then it must stay. So they should remove anything that they're going to take before the open house or before the showings begin.
Okay.
Or if they're not going to remove the stuff, then you need to cross it off or put it in the MLS to say, these things don't convey, and then make sure you put it in the contract, because just because you make that note, as you know, in the MLS, doesn't carry over to the contract.
Okay.
So if the contract says the shutters and the blinds and all that are included, well, shutters not a good example, but well, plantation shutters, yeah. If the contract says they're included, then they're included. Doesn't matter what you have in the MLS. So you would have to, if you're going to include those items during the showing, yes, you would have to mark it off before the contract is signed, so
Okay.
that way to show that it is not included.
Because other Richmond agents have told me to just leave it, and I'm like, well, it's not there. It's not going to be there, that kind of thing. So I just want to make sure.
Yeah, that's someone who probably has not taken my class, or most people have taken the class in Richmond, or someone who hasn't paid attention. But you definitely would cross off anything that is not conveying must be crossed off.
Awesome.
And
Thank you.
conversely, items that are conveying that are not in that list, you would include.
Right. Like the rain contract is kind of easy because then you just check off what's going to be there type of thing, but that's not.
Yeah.
Yeah. Thank you. And then paragraph 4, I did learn something about that first section of the fixed rate not exceeding if they didn't lock in. Then now I know to very definitely tell a buyer that.
Yeah, the second sentence here, what you're talking about. Yeah, that
Thank
it
you.
expire. Basically, you're waiving your right unless you lock in at the time of application.
That was enlightening, even though I might have read it, but it's like.
That's why we're doing this. So this is wonderful. These are great questions.
Mhm.
Okay, anyone else? No? Okay, so I'm just going to keep moving on. And if you come up with a question, by the way, I don't mind going backwards. I am going to do several paragraphs at a time. This way we can keep with the flow. So, even if you have a question about 4 as we move on, it's not a problem, but I'm going to do several paragraph blocks at a time. Next thing is seller concessions.
Sorry, Mr. Lafayette. I just noticed when you got to the bottom of that page. So this is not the July 1st version.
Oh, okay. So you know what? Thank you for that, because this was sent over. So none of this has changed.
Okay.
I'm going to pull up the contract that we do have. This is part of what we call the educational package.
Yep.
That was put out because I've taught this to Charlottesville, Williamsburg, and a couple others that are now using CVR MLS Forms, by the way. So because our forms are spreading out more than Central Virginia. So thank you for that. And I will pull up when we get to the changes. We have changes to paragraph 14 and 22 F, G, and H, and I will switch over to that. This is a cleaner one, so that's why, but I will switch over to that when we get to those paragraphs. All right, so seller concessions. Seller concessions, what we have for us, we try to keep it together. And our seller concessions, you would insert the applicable amounts. If no amount is inserted, then provision is inapplicable. So we have buyer closing cost and we have broker compensation, buyer broker compensation put in here. So with with closing cost, obviously that's again self-explanatory. If you're going to ask the seller to pay anything towards closing costs, you can just insert the amount there. So it's fully negotiable between buyer and seller. And then I think many of you may know that last year we removed buyer broker compensation from our listing agreement. We feel very strong, and I feel very strongly that listing brokers should not be sharing compensation with buyer brokers. That was the whole point of those lawsuits. It's also the thrust of what the Department of Justice is still looking at for listing brokers who share compensation. And so we do not believe that that should happen. I can tell you, I was on a call last week with the plaintiff's attorneys in the national lawsuit, the Sitzer-Burnett case, that settled last year. And one of the things that this attorney said, it was a seminar, was that these plaintiff's attorneys are still looking at brokers and even MLSs who are advocating for broker-to-broker compensation. In other words, listing brokers sharing their compensation with buyer brokers. So if anyone is still doing that, my recommendation is not to do it because that causes risk. To me, the only way to do it is for the seller to pay the buyer broker directly, negotiate that in the contract. So that's what we did last year, and that's what this appears in front of you. So if you are a buyer's agent and in discussion with your buyer, you are asking the seller to pay some or all of the buyer broker compensation, then you just put it in the contract. So in this case, for the buyer broker compensation, seller shall pay the buyer broker, and you would select one, a percentage or a flat fee, and you would just put that in, and that gets credited towards the amount that is owed to you under your buyer brokerage agreement with that particular buyer. And of course, we have the disclosure that's required by the NAR settlement. So Richmond has been doing this for a period of time. It works very well. So again, if you're a buyer and buyer's agent, and your buyer wants you to include some or all of their compensation as part of the offer, this is where you put it. And that's a difference between broker to broker sharing. Broker to broker is a no-no, but seller paying the buyer broker pursuant to a negotiated contract is fine. The plaintiff's attorneys don't care about that because it's not coming from a listing broker. It's not it's the sharing between brokers that is causing the antitrust issues. It's not seller paying the buyer broker directly pursuant to the contract. And DOJ has even said that. So this is, we feel, the way to do it because this is what they've blessed. So that's why we put it in the contract that way last year. And this is what I recommend if you're a buyer's agent and your buyer wants you to seek compensation. This is the way to do it, is in the contract. I also will tell you, in addition to representing associations, I'm also a closing attorney, and so I do a fair amount of closings. And we find in the market, particularly on competitive neighborhoods and stuff like that, oftentimes the buyer's agent or the buyer says, only ask for half or only ask for a portion, and the difference is paid by the buyer at closing. I just did a closing this morning where the buyer asked for 0 as buyer broker compensation, so the buyer paid the entire percentage amount to the buyer as part of the closing cost, and that was when I closed this morning. So I see those from time to time too. So it's all what is negotiated between the buyer and the seller when it comes to buyer broker compensation. And I realize this is not an agency class or a buyer brokerage, but please be sure you have the buyer brokerage agreement filled out, and make sure that you have your compensation that you are worth and that the buyer is willing to pay that. And then, of course, anything that you get from the seller is offset from the broker compensation amount that you put in that agreement. Moving on to paragraph number 6, the appraisal. So our contract has an appraisal paragraph. And you'll find with the CVR MLS purchase agreement, if you've not used it before, one difference we have with VR is we do not have a lot of addendums. Our contract has most of what is needed built into the contract, so there's not going to be a lot of addendums. For instance, when we get to paragraph 16, which is the home inspection paragraph is built in. You don't need a separate addendum. And depending upon like Rain and some others, I know some others even have addendums for appraisal and all that. We don't. It's just part of the contract. So I just want to make that point. So our appraisal paragraph is, it's either the property is or the agreement is subject to an appraisal or not. And of course, you'd make the selection. So is or is not. And then if it is subject to an appraisal, then the appraisal has to be ordered within 15 days from the date of ratification. And it's the responsibility of the purchaser to advise their lender. And if the appraisal is not ordered within 15 days, then seller can terminate the contract. So there is ramifications for delaying the appraisal. You could lose the contract. And this was just as a way to make sure that buyers are doing what they're supposed to do and not dragging on the process. Now, regarding the appraisal, of course, if the purchase price exceeds the amount of the appraised value, then the purchaser can nevertheless just proceed and just pay the higher price, even though the appraisal came in lower. They can just move forward and close in the transaction, even though there's a difference between the appraisal. Or they can make a written request within 5 days from the receipt of the appraisal for a reduction in the purchase price, so long as the reduced purchase price obviously is not less than the appraised value. And then you have to provide the seller with a copy of their appraisal or some written verification from the lender of the appraisal value. And then seller has 5 days to respond, and we call that the response deadline. And then after that, if the parties are unable to agree as to the purchase price within 5 additional days of the deadline, then either party may terminate the contract. If you agree as to the purchase price, then that is written up in an addendum. The deposit paragraph, insert the amount of the deposit and who's holding the escrow. Per DPOR, you need to make sure that the the escrow agent, sorry, using the right terms, the escrow agent is included. Don't put to be determined, because you should not be writing to be determined on who's holding the escrow, because how do you confirm who has the deposit if you don't put the name in right there? Deposit Link is a program that Richmond endorses. It's an online, think of it like Venmo. I don't know if you guys use it, but it's like the equivalent of Venmo for real estate deposits under contracts, and that's what Deposit Link is. And of course, the deposit's going to be held pursuant to the Real Estate Board regulations and will be applied towards the purchase price or refunded according to the VRAB regulations. And then next thing we have is for settlement. And settlement, we have two choices in our contract for settlement. Of course, you put in again the name, whoever's doing the closing, whether it's an attorney or title company. And then the two choices for closings are this. The first choice says you would check the first box and then you would enter the date, or it says a reasonable time thereafter if purchaser or seller is making diligent effort to satisfy any contingencies contained in this agreement. That's what I call the fluff paragraph. That's what a lot of realtor contracts have around the state. It basically says this time or a reasonable time thereafter. So therefore there's a date, but it can move on, because if things are not done, then the closing can be delayed and there's not much teeth in it. Or you can have a second choice we've had, and we've had this in our contract for a number of years. If you want something with a little more teeth in it, you would put in the closing date, and then it says subject to seller's right to cure any title defects set forth in paragraph 24B. If settlement doesn't occur within 10 days of this date right here, then the party who's ready, willing, and able to close under the terms of the agreement can terminate the contract. So let's just say the closing date was today and the seller's ready to close, but the buyer isn't. Buyer's still trying to get their stuff together with the lender. 10 days goes by. On the 11th day, the seller can say, you know what, I've had it. They're not closer. I'm terminating the contract. And they can. Now the purchaser gets the deposit back, but at least the seller can move on to a different contract. Possession is given at settlement. That's how we work it here in the Central Virginia region. So that means that after closing, so that means literally at the closing table, so long as the purchasers brought their money, the lender money's there, the deed's been delivered, everything's signed off on, the buyer has signed all their documents, and closing at the table is done, we hand over the keys. Possession, that is now settlement, and keys are handed over at that point. If you have a seller who does not want the keys handed over until they receive their money, you'd have to write that into the contract. And I'll do just a couple more paragraphs, and then I will break for questions. Paragraph 10 is just whether or not the buyer will occupy the property. Residential property disclosure for us, same thing. I think similar to VR, you check whether or not it is or is not subject to the Residential Property Disclosure Act, and most property transactions that you do will be. The ones that are not subject to the Residential Property Disclosure Act would be ones that are court ordered. Anyone that's selling to a family, foreclosure, bankruptcy, being sold by the court under bankruptcy, those are ones you're probably not going to be involved with anyway. So probably 99% of your transactions will be subject to the Residential Property Disclosure. And then for our fair housing, we have Virginia fair housing, not the federal fair housing disclosure, because it's a Virginia transaction. So ours is broader. As you know, Virginia has more protected classes, including sexual orientation, gender identity, and military status. So those are additional protected classes that we have over federal. So that's why we put that into the contract, because we want to make everyone aware that Virginia does have those additional protected classes. So with that, I'll pause to see if any questions come in on the paragraphs that we have covered so far. You can just unmute if you have a question.
I noticed that you have in your contract, you have the occupancy disclosure outside of the lending paragraph. My experience has been that the occupancy disclosure in the other contracts that I've used is only related to lending and qualifying for the loan. So am I understanding that correctly? So, because sometimes we won't fill it out if it's a cash, then
Yeah.
we don't fill it out. But in this contract, you're expecting that to be filled out regardless of how they're paying.
Yeah, that's how most people use it. But believe it or not, there's an old law that I'm sure realtors had put on the books that says that a purchaser must disclose whether they intend to occupy their property or not. It's actually state law.
Oh, is it?
Yeah.
Yeah, I wasn't aware of that
Yeah.
either.
No one, it's one of those blow off the dust. No one knows it's buried, but yeah. So
Do you
that's why it's in our contract and it's separate.
do you happen to know which statute that is? Just, but I probably not. But
Yeah. So what I'll
I
do
can
is
look it
this.
up if,
I have dual screens going in here with what I'm showing you. So we'll probably pause for a little bit of break in a bit. I will look it up on the and then come back to you when I can kind of
okay,
minimize my screen.
great, thanks. Yeah, I don't have any other questions.
Okay. Anyone else? Okay. So we're going to move on to paragraphs 13 and 14 and 15, and they're all related for our paragraph. And this is common interest communities or HOAs and condos, right? As you know, we started with this new law that, a common interest community is the umbrella term or phrase for POAs and homeowners, property owners association and condos. So that's what a common interest community is. And then, as you know, Virginia decided to come up with a Virginia Resale Disclosure Act to combine the disclosure packets for homeowners association and condos. And now we don't call them disclosure packets anymore under law. We call them both resale certificates. So we just had to change ours, of course, last year like everyone else did. And so is the property subject to a property owners association or not, or a condo, so is or is not in the development, okay, that is subject to the Resale Disclosure Act, which means that they're a property owners association or condo. So you just check is or is not. And then we talk about the resale certificate, and this is almost identical to what is in VR because it's all state law. And as I mentioned, this is one of the paragraphs that's going to change. So what I'm going to do that has changed or will change tomorrow, and one of the reasons I still teach with the existing contract and have taught is that technically this is still the contract for today. So let me open up my file here and pull open the new contract. So just give me 1 second.
While you do that, do you mind if I ask a question? The
Yeah, just hold on 1 second because
Yeah.
I can't click and answer at the same time. So
Yep.
okay, come on, come on, come on. I have to go on the right. I have so many folders. All right, so here we go. And can you see I'm scrolling now and okay, would help to go to the right form. That is the listing agreement. Sorry, too many open files. There we go. Okay, do you see the purchase agreement? It says first page, paragraph 1. Is that what's on your screen? I just want to make sure from a share screen. Do you see it's paragraph 1 with the cursor?
Yes,
Yep.
sir.
Okay, good. All right, so this is the newest contract that's just in effect. So we're going to switch to this, and actually I've just pulled it up and it is nice and clear. So I'm just going to continue using this one for the rest of this particular class. So paragraph 14 has been updated. We just went over paragraph 13. That has not been updated. Paragraph 14 has been updated for us. Now, VR did it last year, did this update, but we elected not to. And what it was the statute last year changed to say that you can negotiate the rescission period when it comes to, the homeowners association, condominium associations resale certificates. We had in our contract, like everyone else for years, the 3-day right, because that's what the law provided. Last year, as a board, they decided just to keep the 3-day right of rescission, and it was not negotiable in our contract. Well, you could, but you'd have to handwrite it in. So we never made that change, but VR did make the change last year where you would insert the number of days for the rescission period. CVR MLS elected not to do it, but VR did it, and then others did it last year. So we just went ahead and made the change. So the rescission period now is negotiable under our contract. So you would put in what the rescission period is, enter one or more days for the rescission period, and that's what you do here. So that is the one change to our paragraph 14 under the resale. The rest of it is just identical to VR because it's the state law. And as you know, under state law, the purchaser is to receive a disclosure packet, i.e. resale certificate from the association. And upon the delivery, they have the number of days to rescind the contract based upon the number of days that is provided in the contract. So whether it's 1 day, 7 days, 3 days, 20 days, it's whatever you all negotiate. And during that period, the purchaser can rescind the contract for any reason or no reason by providing written notice back to the seller. So our paragraph 14 and VR is identical as far as the process for terminating the contract because that is state law. What we've also put in our contract to be very clear is that, of course, the purchaser, if the seller pays for the resale disclosure certificate provided to the purchaser, if any party wants to request an update to the resale certificate, then the requesting party pays the fees for the delivery of the updated resale certificate. That's what the state law provides. Okay, if the settlement agent or anyone else authorized by the seller or purchaser, if they want a financial update, which just gives an update as to the dues and whether anything's past due, then per the law, seller pays that. I believe that's already in the VR contract, but we're just copying what's in the law. So just to make you aware of that. Now, paragraph 15 is a paragraph that I do not believe is in the VR contract, and it comes to owners association repairs. So let's just say that a property or condominium owner association does an inspection, and we have several associations in our area, and I know there are some in Williamsburg, that once a resale disclosure packet is ordered, they do an inspection of the property and make sure the property is in compliance with their governing documents. If not, then they issue a report. The front door is not painted correctly, or the shutters are painted the wrong color, the landscaping, the tree has died, you need to replace that, whatever. So we have a paragraph specifically for that, which is paragraph 15. And paragraph 15 just talks about that within 5 days of receiving any inspection report, the purchaser can ask the seller to remedy any situation or make whatever repairs are necessary to the property prior to settlement. And if the seller refuses to do it, then the purchaser can terminate the contract. Now, if the purchaser does not make the request within 5 days of receipt of the report, then they waive the right to make that request. And by the way, let me refer right back to the appraisal paragraph. One thing I forgot to mention in my summary is same thing with the appraisal. Once you get the appraisal in from the purchaser, you have 5 days to make that request to the seller to reduce the price if the appraisal came in lower. If you do not make that request within 5 days, then you're waiving the right to make the request for a reduction in the purchase price. So it's 5 days under the appraisal, and it's 5 days under the repairs for the association. So the purchaser both has 5 days in order to make the request to the seller, to make the repairs, to bring the property into compliance. This is not repairs as in HVAC. This is whatever it takes, repairs or do something just to make sure you're in conformance with the association documents. Typically, again, that's the paint on the door or on the shutters or the landscaping or something like that. Then the seller must do that. So with that, I'm going to pause before I move on to the property inspection paragraph, which is a pretty lengthy section. Any questions on what we just covered?
I had a quick question on 14. It's often discussed when we're in a group whether you can waive your right to the disclosure package as a buyer altogether, and my understanding is no. But I'd like to just,
I'd like to ask you. Yeah, that's my understanding also. The language is not clear. I wish we all could write our language for the law, and it is not clear because it calls for you must deliver the association packet, as you know, that cannot be waived. So the seller and buyer cannot waive delivery of the association packet. The law is silent as to whether or not it can be waived for the number of days. And in fact, the way it says the contract shall contain the number of days. Well, that's why we have one or more, because if it says it shall contain the number of days, to me, that starts at one. If you put 0 days, to me, that's not the intent of the statute. So we've interpreted the rescission period to be one or more days in Richmond. And that's how we interpret it. Others may differ, but that's how we interpret it. We don't think you can waive it. It has to be at least one day, because the law does not say specifically that you can waive it.
That was my understanding as well. But the question, yeah, comes up a lot. So thank you. I appreciate it.
You're welcome. All right, so then on paragraph 16 is the property inspection. As I mentioned, VR has a separate addendum for property inspections. We do not. Everything's included what you need right within paragraph 16. So first of all, there's no law requiring, of course, a property inspection. So if the buyer decide to waive an inspection, you just check the box waive an inspection and move on past 16. If, however, the inspection is requested, then of course you would select paragraph number 2 here, or box number 2, and it says seller grants purchaser to have the right to have the property inspected by a licensed home inspector or other person selected by purchaser at purchaser's expense. And here's the key for us: to request repair of defects revealed and or seller paid closing cost credit. So we call that the repair request. And we have a specific addendum if you want to use it, or you can write it up yourself. But it's to request repairs of defects revealed, okay? Now, the key to understanding our contract, paragraph 16, are really the next couple sentences. First of all, the inspection can include anything. It doesn't just have to be the property inspection, calling the guy for the property inspection. You can have a contractor come out for, structural and building components. You can do radon gas, underground storage tanks, soil testing. Whatever the buyer is willing to pay for inspections can be done. It can be just a whole house inspection. It could be 3 different types of inspections. Does not matter. Okay, so that's number 1. You can do whatever inspections the buyer requests. Number 2, our contract has a definition of defects, which is very unique. And so since this contract is based, or this paragraph is based upon a repair of defects revealed or credit for that, you need to know what is a defect. So we have this paragraph right over here of what it means for a defect. So it's used in this paragraph, okay, paragraph 16. Defect means a condition which impairs the normal stability, safety, or use of the improvements, which are the buildings or other things like that on the property, or damage to any part of the improvements, but shall exclude cosmetic flaws, antiquated systems, or grandfather components that are in working order but would not comply with current building code if constructed or installed today. If a system or component is near, at, or beyond its projected life expectancy but is not properly functioning, then such system or component will not be deemed a defect as defined herein. This language is very similar, this last sentence, to VR's language, but we have a specific definition for defects, because what we try to do, and we've had this for a number of years, is try to separate what is cosmetic, because cosmetic is not a defect, therefore not included, or something that is old, that's still not included, okay? So that's why we're very specific for our definition of defect. And then we ask for only defects to be repaired, because that's all, or revealed, because that's what says it right over here. Now, this next paragraph is also key, because we have a deadline like everyone else, but here's what you have to do. Purchaser shall provide seller with all inspection reports. I'll stop right there. It does not say selected pages as I, as the listing agent, decide I want to provide the buyer or buyer's agent. It's all inspection reports. That means, cover to cover, all pages, all reports. Okay, so just make sure you don't just send isolated pages. Next thing is, this is also unique in the Richmond market, cost of repairs. The inspectors in our market give you a cost to cure or cost of repairs. So if there are 5 items listed, they're going to give a range. It may say $200 to $500, maybe $400, maybe $1,000 to $2,000, whatever. But that should be listed in the repair request, the range or the cost of repairs. And then also the written request for repairs. That is the itemization. So if there's 5 items, then you list all 5 items. And then you also provide the inspection reports, all the pages, not just for the 5 items, but all the pages. And then on those 5 items, you give the cost to cure. Granted, it's just an estimate, but that's okay. Most people use 10, 14, or 15 days after the date of ratification for the inspection deadline. That's what I see come across my desk all the time. And it says if no box is checked, then the default is 10 days. In the repair request, purchaser can reserve the right to request that repairs be performed by a licensed contractor. And all you get to do is write it that way. So let's just say there's 5 items. 4 of them, you don't care if the handyman like fixing a screen or a broken window, whatever, but one of them is HVAC. You can say that seller shall have HVAC, whatever's broken, condenser, whatever, and repaired by a licensed HVAC contractor. You can write it in specific like that. Our contract allows for requiring licensed contractors, but you have to write it in if that's what you want. Okay. But you cannot request that the seller perform any inspections, only repairs. So you should not write in on the request, seller shall have the HVAC serviced, inspected, serviced, and certified as to an operating condition. No, it's up to the purchaser and their inspector to find out what's wrong and just request the seller to make those repairs. Now, if purchaser does not submit the repair inspection report, cost of repairs, and the repair request by the deadline, then they're waiving their right. So this is very important. Don't miss the deadline. And, I have to say, as an attorney teaching so many associations, I get a couple calls a year from agents who have missed the deadline. And they're like, oh my God, well, I've missed the deadline. What happens? I'm like, well, you better call your broker, and B, you better call your E&O carrier, because you're probably going to have a buyer who's going to file a claim against you because now they're buying a house without any repairs because you missed the deadline, and the seller says you waived your right. Right? Now moving for the process. So you've done the inspection, you've written up the request, and you provided a copy of the all the repair reports and the cost to cure to the seller. The seller then has 7 days to consider what you provide to them. And we call this the negotiation period. So seller has 7 days to respond. Now, most sellers respond, within a day, whatever, but they have up to 7 days to respond. If the seller agrees in writing to accept the repair request, then the parties obviously move on to settlement. If seller does not respond in writing, then it's deemed that they have rejected the repair request. Okay? So bottom line is you make that request. Seller can go back and forth with the buyers many times. You have 7 days to keep negotiating. Okay? And that's what this is. You can make offers and counter offers and keep going. But at the end, by 5 p.m. on the 7th day of that negotiation period, so you have 7 days to negotiate. If no final agreement is reached as to the repair request, then purchaser has 2 days to either accept the last offer made by the seller or terminate the contract. So they can go back and forth as many times as they want, offer, counteroffer, counteroffer, counteroffer. But purchaser has the last choice to accept the last offer made by the seller and either can accept it or terminate the contract. So that's how our repair addendum works. Get it done, give them the inspection reports, cost to cure, and then you get into the negotiation period, and purchaser has 2 days. If they can't, seller and purchaser can't agree as to what the repairs are during the negotiation period, purchaser has 2 days after that 7-day negotiation period to accept or reject that last offer made. And of course, if they reject it, they're terminating the contract. One other paragraph that we have within paragraph 16 is this optional paragraph. I can tell you It's not being used very often because it's still a seller's market. It was used prior to COVID when it was more of a neutral, somewhat buyer's market. Not say buyers, but kind of a neutral market. But I don't see many, I haven't seen any offers in the last several years come through with this box selected. It's an optional paragraph. And it says, this paragraph, select one, is or is not applicable. If no box is checked, then this paragraph is not applicable. And this paragraph, if this paragraph is applicable and purchaser is dissatisfied with their inspection results of the property, then instead of submitting the repair request, the purchaser can just terminate the contract. So in other words, they don't like what they see. The house is a horrible mess. Instead of doing the dance of trying to come up with all the list of repairs and trying to, scare the hell out of the seller and give them this list and hopefully that they never agree to make all the repairs, instead, the purchaser could just terminate the contract. Because our marketplace is so competitive right now with the inventory still very tight, no one is checking the box as being applicable because they don't want to lose the bidding war with sellers, other offers that don't have it checked. So that's why I'm not seeing this checked very much. I mean, I'm not seeing it checked at all. So again, it's up to you and your client whether to check it, but I'm just letting you know the marketplace in Central Virginia is such that no one is using this box, this optional box at this point, because they want their offer to be competitive. And the last part of paragraph 16 just says if for some reason the utilities are turned off, then the purchaser has until 10 days after the utilities are turned back on and the purchaser is notified that they're back on to do the inspection. So again, this is a big paragraph because it has to do with repairs. So I'll pause after this and see if there's any questions on paragraph 16.
So the paragraph, the second paragraph with dealing with the 7 days, the seller. Okay, go back up just a little bit, Michael. I'm sorry. There you go. There you go. That paragraph that's right there at the bottom of the page. So the seller has 7 days to respond, but really the whole scenario has 7 days to get negotiated.
Yeah, they have 7 days to respond. If they wait till the seventh day, then there's very little time. And if they wait till the seventh day, that's because they don't want, I mean, frankly, it's because they don't want to counteroffer. They just want to submit the last thing. And some people do that strategically, like minutes before they just submit it. They're like, here's the offer, not enough time for the buyer to respond back. And then the buyer can respond back and say, okay, we can either just accept that offer or cancel the contract. I don't see that very often though, Nan. The vast majority that we see is people respond pretty quickly from what is submitted and they go back and forth during the negotiation period numerous times. That's what I see, and that's what I'm called about all the time because, as I said, I'm a closing attorney, and the ones that I'm involved in as the closing attorney, I mean, I'm not a hotline for just general questions, but that's where I have my closing attorney hat on. So the agents or my clients that I'm doing the closings for will call me from time to time, and typically it's gone back and forth so many times. They're like, okay, where are we? What do we, and I'm like, just clean up your addendum because I can't read it and you can't read it. So just clean up exactly what the hell's supposed to be done because in order to be enforceable. So that's really that's usually the typical type questions. It's very atypical that someone doesn't respond.
And I just want to make sure with the repair request, it also has to have an estimate of pricing. So there are some companies that actually, I think Pillar to Post and US Inspect will do that for you, but it takes like 2 days to get it post the inspection.
Yeah,
So
so
does
I would
that
say
qualify as
most of the inspectors who do inspections in Richmond Market are used to this, the ones who do the Richmond inspections anyway. So they provide them as they go, and sometimes they have to get back to you, but they're very well versed on doing that because that's what they have to do. Realtors won't call them if they don't provide the cost of repairs because, they know the CVR MLS contract requires it. So we don't find that much of an issue. What we find it for an issue is someone who's not in our marketplace who does the inspection. They're not used to providing cost of repairs, and that is what makes it unique for them. And sometimes they just say no. So you can do one of two things in that case. There's nothing, an inspection is not required by law, as you know. So this is all just set up by contract. So if your client buyer says, hey, I want you to strike cost of repairs, you got to do that at the time of offer. And so you would have to, there's a couple times where it is mentioned, let me just say, so you would search, you would have to cross it off. So there's no law saying you have to have the cost of repairs, but you'd have to cross it off here and then in the second part right over here if you cross it off. Just be advised, if you cross that off, the sellers may counter back and say, no, we want the cost of repairs because people are just so used to having it in our marketplace. But there's no law saying you have to provide it. So again, if you want to cross those two in those two areas off, you can, and then you wouldn't have to submit it. But you got to do that at the time of the offer, obviously, because
Right.
when the seller signs off on the contract, that already has to be stricken.
Our marketplace doesn't have that as a common practice of getting a cost of repairs, so it throws us when we have a contract. We just need to be mindful that that's in the CVR contract.
That's exactly right. And so, for instance, let's just say that it is in Williamsburg or whatever the market that you're doing it in, and you receive a CVR MLS contract for one of your listings, then you could, as part of the counteroffer, while maybe you're countering on price, you could strike out cost of repairs here and wherever the other one was. Whoops, I went in.
It was a few lines down.
Yeah, what did I just do? Okay. All right, yeah, so it's in a couple lines down, but the cost of repairs here. But I have no idea what I just did on that.
You can hit the X up there.
There it is. Thank you. Stress. So anyway, that's what you'd have to do, is to cross it off. So, yeah.
And it's more about for each other in town as we get used to the CVR contracts that we, back and forth here in Williamsburg. Getting one from a CVR and going back to CVR, that's one thing, but we just need to be aware of that as a different practice as for the brokerages.
Yes, that's exactly right, Dan. And we're one of the few in Virginia that have cost of repairs, but it's one of those things that's been the marketplace, and it comes up for vote every once in a while, every few years, and it consistently gets high marks to keep it in. So
Oh, I get it. I like it.
yeah. All right. Any other questions so far? All right. So then I'm going to move on. Not that these paragraphs aren't important, but default and choice of settlement agent, those are all kind of like the standard stuff. Our broker compensation doesn't mean you insert the amount. It just says these are just the both brokers agree to inform the settlement agent what your compensation is. So that way the closing attorney or settlement agent knows what your compensation is. So that's what this is. Home warrant.
Sorry, I did have one thing.
Hold on,
with
Elizabeth. What we're
paragraph.
going to do is this. Instead of kind of jumping in as I'm going through, I'm just going to take breaks. I'll answer your question now, but just wait this way we don't have interruptions. It's just better if I do a bunch of paragraphs at a time, but go ahead.
You just scrolled past
I
18.
know. I said I would get back to them, but I still like to do several, but go ahead.
No, that's okay.
All right. So the next thing is the home warranty. So declines coverage or elects to purchase the coverage, and it says who buys it. Just be aware, again, that's what we have in our agreement. You can just, insert or not insert. And of course, our paragraph 23 is for additional terms in there. So anything to write in. And I would tell you, this is just all the practical advice, no matter what contract you're using, RSVR, if there's not enough room in the additional terms, please don't just smush it down, add an addendum so that way it works. I'm going to cover the next several paragraphs, and then I promise you, Elizabeth, we'll go back, and then any of the paragraphs I've covered, you can ask the questions. All right, so paragraph 24A, what we have for our expense promotions is very straightforward. Who pays what. It's just the same thing like in the VR contract. What I'm not sure is if the VR contract has this part about fuel oil and propane and LP. We do. So if they do, same thing. So just make sure that you get it measured so therefore it can be added to the settlement, okay? Now, as far as title, we have a 30-day title search to cure defects. So after the seller's been notified 30 days, if the title defect is not cured within 30 days, then the purchaser can terminate the contract. So ours is limited to 30 days, so 30-day right to cure. Wanted to bring that point up. And then when it comes to equipment, condition, and inspection, again, I think this is slightly different than the VR's contract. Ours says, of course, that the seller will convey and purchaser agrees to accept the property at settlement in a physical condition as of the date of ratification, except as otherwise provided herein. The key term or phrase, except as otherwise provided herein, that would be paragraph 16 if there was repair request, right? Also paragraph 14, for instance, the HOA, but also what's the remainder of 24 EFG. So for instance, I want to make sure the second sentence you're well aware of, which is again different than the VR contract. And what it says is seller warrants that all warrants that all appliance, heating, and cooling equipment, plumbing systems, and electrical systems will be in working order at the time of settlement or purchaser's occupancy. Okay, whichever occurs first. It does not matter whether or not there's been a home inspection. And I think that's the difference between us and VR. I don't have their contract memorized, but I've read it a bunch of times. But I think theirs is contingent whether or not there's a home inspection. For us, it does not matter whether or not there's a home inspection. These items are in place right over here. So for instance, if your appliances are going to convey as is, you need to strike out appliances here because it says working order. And then you have to write in paragraph 23, appliances conveying as is condition. This way, it's crystal clear, because if not, they're to convey in working order. So just be aware of that is a difference between us and VR. Okay. All right. So let me pause. And then Elizabeth, you had a question on one that had scrolled back.
Yeah, it was on 18.
Okay.
The settlement agent, I noticed you didn't have a blank to fill in the seller dollar amount like the other contracts do.
Yeah, we don't, what we just have for ours is no settlement agent may collect fees, from a represented seller payable to the settlement agent or subsidiaries without first obtaining the written consent of seller's counsel. We don't have any dollar amounts because again, in our marketplace, it is just something that has to be negotiated, and there's not a dollar amount. And basically, we settlement agents, we just don't have any minimum fees in the contract, and our members feel that it works better because it seems like if you put some dollar there, then it's going to be the amount that you put in, whatever the fee. So the fees end up being whatever minimum you put in there. So there is no.
Are you seeing two, like a buyer, somebody representing the buyer at closing and somebody representing the seller at closing in your market?
Yes. So what happens in our market? Of course, the settlement agent represents the purchaser only. Typically, we don't have that many dual closings where they represent both the buyer and the seller. Of course, only attorneys can draft the deed. You have some title companies that facilitate on the seller side, but still only the attorney can draft the deed. What typically happens, our marketplace in Richmond is still pretty big on attorney closings. So you have attorneys who can do the buy side, and you certainly have attorneys who do the sell side. The settlement agent by law is required, and the settlement agent who's selected by the buyer, that is, the settlement agent must close the transaction and disperse all funds. That's required by law. But the seller is still required to obtain the deed and other documents, and that is normally prepared by the attorney and then forward over to the settlement agent for them to conduct the actual closing with the buyer. So that's traditionally how it works in our marketplace.
Okay, and then if there are fees, like tracking fees and overnight fees, then those are negotiated like at the time.
That's correct. So what will happen is, depending upon the transaction, you may have a title company or attorney, so let's call them, the settlement agent, who will want to charge fees to the listing side. And this comes up sometimes like Northern Virginia, sometimes even some Tidewater title companies that for some reason are, doing a transaction that it's in here in Richmond, and they'll just do a blanket fee to the seller, which is really kind of a junk fee. I hate to put it that way. It's not like a release fee. It's not a FedEx fee. It's not a wire fee. And we're like, no, we don't pay. You're not representing the seller. We drafted the deed. We provided the documents. We gave you everything. Certainly you can charge a wire fee or a FedEx fee or a release fee of a deed of trust. Certainly those things. but you're not charging our client a settlement fee because that is paid for by the buyer and you're conducting the settlement on behalf of the buyer. You are paying off this, the deed of trust will pay you for that, again, the release. But we traditionally do not approve settlement fees where there's also the attorney representing the seller doing all the work and where the settlement agent is just doing the transaction really on behalf of the buyer and then just making the disbursements.
Yep. Okay, sounds good. So it's all negotiated. I can.
Yes,
Got that.
bottom line is, yeah, simple answer is all negotiated.
Got it. Thank you.
Okay, so now I want to go to 24F, G, and H. So we have just updated our contract with respect to paragraph 24F. This is on the septic, and I'll just spend 2 minutes going over septic. Well, let me just ask this. Is anyone not familiar with the septic system legislation that begins September, oh my God, July 1? And it's okay if you're not, do not be embarrassed, but I just don't want to cover something if you already know it. Is there anyone who needs me to review what's happening as of tomorrow for septics?
Please cover it.
Cover it? Okay. So tomorrow, as of July 1, the law changes and they call it minimum requirements for septic inspections. But really what it means is in order to do a septic inspection now, you have to have a full inspection. So starting tomorrow, you can't just do, for instance, rod probing, sticking it in the ground and do a mini inspection like that. So inspections have to be what I call a full inspection of the property. That's number one. Number two, before the inspector can actually do the inspection, the inspector actually has to enter into a contract with the client that sets out the scope of services and the cost affiliated with doing that inspection. And that contract has to be signed between the client and the inspector, again, before the inspection begins. So first step is you can call up and schedule the appointment with the inspector for the septic, but they cannot actually do the inspection until they actually come out with a contract with the client that discloses, again, scope of services and cost to do that inspection. And then it has to be signed off on by the client. Now that can be by e-signature or whatever, but nevertheless needs to be signed off on. So that's the start of it. Then with the inspection, again, it has to be a full inspection, which also means that they're going to check not only the distribution box and tanks, but dispersal fields and other components. So they have to do a full inspection. You cannot, by contract, say, oh, we don't want that full inspection. We only want a half inspection. Can't do that because by law, the inspector is required to do a full inspection. That's what is under the law for septics. And so these guys are licensed. If they do anything that is not pursuant to the law, they could lose their license. So they're going to do a full inspection because that's what the law requires. So again, you can't change the type of inspection by contract. The inspector has to get out a written report within 10 business days of the inspection. That's new. So, and it cannot be pass, fail, or grade. It has to be a full written report within 10 business days of the inspection, detailing the condition of the septic system, anything that they could not see because it was hidden like under a deck or a tree or something like that, and then any defects or defective or damaged equipment. And they have to specify that all in the report. They also have to pull a copy of the operating permit. So to show the capacity of the system, is it designed for 3-bedroom, 4-bedroom, whatever, and report that. So this latter part about pulling the operating permit, we think is going to cause a big problem, particularly with homes who may have converted like a bonus room or an attic or, basement into an additional bedroom or two, but never had the septic system updated. So you may have listings where the number of bedrooms in the house is greater than what the septic system operating permit says. And so that could be an issue. So those are all the changes that become effective on July 1 tomorrow. So again, you need to have a contract with the client in order, the septic guy does, in order just to do the inspection. It has to be a full report. The report has to be out within 10 business days of the inspection, and they have to report the capacity of the septic system. So with all that in mind, we've made changes to the contract. And we are, this first paragraph, if you've looked at our contract before, you see the first paragraph right here that I'm circling has not changed. So the property is served by well or municipal water system. So that's always been the case. You still make that choice. Or it's served by septic system or municipal system. Same kind of thing. You make the choice. And by the way, we've had this in our contract also for a number of years. If one or more municipal systems is selected and it's determined before settlement that it's not on one of those systems, then the parties negotiate what to do. This comes up where people think, oh yeah, I'm on the county sewer. Come to find out, it's a septic system, and it gives the parties the chance, this paragraph, to negotiate what to do at that point. Now, paragraph number 2, if it's served by a well, we used to have a 30-day window to get the certificate, right, from the lab. We've now increased that effective tomorrow to 90 days. This is not a law change because the law does not require, by the way, a well test, right? There's no law requiring a well test. Some lenders require it as lender policy, but it's not a law. So that's why we went ahead and increased it to 90 days because we've had a number of people say, 30 days is not enough for the well water testing, so we did 90 days. Here's where we made significant change to the paragraph when it comes to the septic inspection. First of all, we put in here, select one. Do they waive the septic system inspection or do they request one? As I mentioned at the beginning of this presentation or when we reviewed the septic, there's no law requiring a septic system inspection. The law just says if you're going to do one, then it has to be a full inspection. But there's no law, including this new update, that says you must have an inspection, okay? Only if you're going to do one, then it must meet the minimum requirements. And if it meets the minimum requirements, we have that, then you move on, okay? So that's what it is. So most people will select that, the seller shall furnish, do the inspection and furnish the report, not more than 90 days. So that report can't be dated more than 90 days prior to settlement. So you can see it lines up also with the well testing. So people have a longer period of time to get these things done. So up to 90 days is now don't confuse that with the time frame that the inspector has to issue the report. The inspector only has 10 business days to issue the report. So whatever the date of that report, it can be up to 90 days prior to settlement. So that's the distinction. And just like the code says, that report must identify all the inspected components and also report, any adverse conditions such as defective or damaged components, along with any components and the reason for that have not been inspected and the reason for omission. The inspection of the septic system shall include pumping contents, and that's required under the new inspection. Also, inspection of the distribution box, tanks, and other components required by the law. Okay, so that the law sets out all those components, as I mentioned, the box, the tanks, control panel, dispersal field, so everything to be inspected. And then it says, in addition to the foregoing, the following additional inspection shall be conducted. So for instance, if you want a video camera down some of the pipes, you would have to add that in. Not many people are going to do that. Most of your transactions, you're going to leave this line blank, probably the vast majority, if not all of them. So that's what the new paragraph is. In CVR MLS, we used to have selection. You select rod probing. You select, this kind of thing, pump tanks and visual inspection of the tanks. And you had other to write in what you wanted. Those choices are all gone now because the law is saying what the requirements are for the inspection. Basically, even though it says minimum inspection, it's really a full inspection. So minimal sounds like, or minimum like sounds like they're not doing much. This is a full onboard inspection is now what's required. So I'll say it again. I know I've said it twice already, but the state law in effect tomorrow does not require an inspection. That's something between the buyer and seller to negotiate, or if the lender requires it. But if they don't, you don't have to get one. Of course, it's prudent if you do. But if you do get one, then the inspector, by license law, by the new state law, must do a full inspection. They can't do anything that's half-ass or something that's been negotiated that's less. Okay, they must do a full inspection. Now, under our contract continuing, if well water contamination or septic malfunctions are found, then those repairs have to be done by the seller subject to the limitation in paragraph H. We have a wood infestation paragraph that's very similar to VR's, except ours has now been increased to 90 days to get the certificate. Just like the other two above, there's no law saying you have to get a termite inspection done. That is just something that's negotiated between the clients, buyer and seller. And so we have upped the certificate, can be up to 90 days from date of settlement, again, to give more time. So bottom line, well, septic, termite, all those are 90 days prior to closing they can be done. And for the termite, it's all properties, excuse me, all the dwellings or, any of the structures that have a CO or anything that you want to list here, just like VR. Now, paragraph 24H, limitation. We have what we call a repair limit. And the default of the repair limit used to be $1,000 forever. We just change it, and as of tomorrow, it increases to $2,500. So if you don't write in a repair limit in here, it will default to $2,500. If you don't like $2,500 and you want a repair limit of $1,000 or $2,000 or $5,000, whatever, higher or lower, then obviously write it in. But if you don't write it in, the default becomes $2,500. And what is our repair limit for? It is for paragraph F and G. So as you know, F is the well and septic, and G is for termite. So if the total cost to do the repairs, including the well treatment, exceeds the repair limit, then our contract says seller can just go ahead and pay that extra and just be done with it, or they can refuse to pay anything above the repair limit dollar amount and just credit that to the purchaser at closing. But here's the catch. If they take that second option and only give a credit to the purchaser for the repair limit and don't pay the difference, purchaser has the right to cancel the contract. Now they can move forward with closing and take the credit, or they can say, no, you haven't fixed everything. Even though you're willing to pay up to the repair limit, that's not fixing everything. I'm going to terminate the contract and move on. So just be aware of that. That's how that would work. And then lastly, when it comes to, and I'll just switch to the VA loan, all this lien, it's all the same as VR. We do have our acceptance paragraph. And for our acceptance paragraph, of course, you can e-sign, but for the acceptance, you would put in the date and time, or this offer expires and shall not be binding. And we give specific instructions on what to do if the parties want to accept an expired offer. So if the parties desire to accept an offer that has expired, then the date set forth in this paragraph 7 must be revised to the ratification date or later, and each party must initial such revision, and then, of course, ratification and delivery must occur. So what does that mean? That means not only the parties initial, but they have to then exchange the contract, so that way they each have the full contract. That is the ratification and delivery. So the date of ratification is when that happens, when each party finally gets the final copy of the signed and any initialed documents that needed to be initialed. That's our date of ratification. Okay. Then as we come down here, we have the signatures. And then for informational purposes, we ask for the information here. It makes it so much easier, particularly on the closing attorneys and all that, if all this information is supplied. That way they can do the closing disclosure and everything else that's needed for the lender if there's a lender. Okay, so that is everything on the purchase agreement. I have some other forms I want to go over with, but I will pause right now and ask if you have any questions on anything that we covered 1 through 27 of the purchase agreement.
Can you go back up to the septic real quick? Let's see. So it doesn't, if the house is not, I didn't quite, I've experienced it myself, but if the house is allowed for a 2-bedroom and they market it as a 3-bedroom, and the septic people come out and say it's only good for a 2-bedroom, where was that addressed in the contract?
Yeah, that's not addressed in the contract. I can tell you that CVR MLS has a rule. I don't know if Williamsburg has a rule, but we have a specific rule that says you cannot advertise the property or list it in MLS for the greater rooms, well, for the number of bedrooms greater than what's in the operating permit. So if you in good faith think it's a 3-bedroom permit and you don't know about it and you list it for sale as a 3-bedroom, that's fine. But if you find out by the operating permit it's only 2 bedrooms, then you have to change the listing to 2 bedrooms, because that's what our MLS rules are. Don't know what yours are, but that's what ours are. I don't know what Rain, either, but that's what ours are. And then I also would advise, the contract doesn't say this, but for some reason, if it's under contract at the time you find out there's a discrepancy, obviously you have to immediately notify the purchaser of that discrepancy. I mean, they're going to find out from the report, but as a risk management, I'm advising that you, as the listing agent, and on behalf of the seller, notify the buyer and buyer's agent of the discrepancy just to make sure they have seen it, so that way there's not, a lawsuit after the fact that says, hey, you sold me a house that said 3 bedrooms, but it was only 2 bedrooms. You can at least point that you put them on notice before settlement and they went ahead and did the closing. Well, then that's on them. It's not on you. The issue that's going to come up, Nan, and everyone, is unintended consequences from this legislation. And unfortunately, I think it's going to come up a fair amount of times where, you pull the operating permit, and now septic systems, very few people pull the operating permit just to do the inspection. So on every single one of these, it's going to get pulled now. And so you're going to pull it and you're going to see a difference. And then you're going to have some buyers who probably will say, oh, I don't care. I don't care if it says 2 bedrooms and it's a really 3 bedroom as built. I'm fine. I want to buy this house. But you may have some buyers who say, hell no, I'm not buying this house. If legally it's only 2, why would I pay all this money? I want a reduction in the price if I'm going to buy it, or I want to walk. So I think that's where the issues come up with a particular seller, is if the buyer has, heartburn over the operating permit not matching what's constructed. And I can see why, because when they turn around and sell it, they're going to have to market it at the number of bedrooms that the permit says, not how it's constructed.
And the one last thing about that is the pumping question. Is it pumping count as or not count as a full inspection?
What is it again,
The
Nan?
pumping of the septic system?
Yeah, so just pumping alone is not an inspection. You have to do that as part of the inspection. Is required to do the inspection. You have to pump the tanks, plus then do then actually inspect the distribution box and other components. So pumping is just part of the inspection, but it is not the inspection. Just pumping is not enough.
No, but it's inferred through the law change that pumping will take place as part
Yes,
of
it
the
actually is. It's
inspection.
actually it will take place. And then
Okay.
and in one place it says if there's not, you have to disclose that to the seller. I'm like, why does it say in one sentence you have to do it, and in the next one if it's not done? To me, the law is poorly written. So that's
Yes.
why in our contract we say shall include pumping content. So
Okay.
that there's no and that's one thing I think we've done differently than VR, but this is just, we want no misunderstanding and we've talked to a bunch of, I have inspectors, and they're like, you can't do a full inspection of the box, the distribution box and the tanks if it hasn't been, been pumped. So if we're going to have to do a full inspection like the law requires, it has to be pumped. So we just made the determination, we're putting in there specifically that it has to be pumped, because you can't do a full inspection. The inspector can't do their job, and we don't want all these failures. So that's why we said the tanks have to be pumped. So we just put that in our contract.
Okay. Thank you.
Okay, any other questions on the contract? All right, so then I'm going to move on. Do you guys need a break? You want to just roll through so this way we don't go? What do y'all feel? I don't have that much more.
I'm okay to roll through.
Nan, everyone else good? Jennifer?
Me too.
Okay, so I will then do that roll through, so this way we won't keep you. So the next thing I want to go through is some agreements these are part of the form file. Obviously, we have a lot of forms, so I kind of picked the ones that are most popular. And we have a possession by purchaser agreement where the purchaser goes in early. So it's a nice agreement that goes into detail. VR has used most of our forms for their form. Ours is slightly different, of course, so they've copied most of it, but it's slightly different. So just realize the differences there. But it allows for the possession date. So you go in, so this is again early possession for the buyer. So it allows for the possession and how it's going to be paid, whether any, the number of occupants, whether there's any pets, stuff like that. So it's pretty easy to fill in the information that you need, what you do. Very importantly, though, you need to do a pre-settlement walkthrough, because consistent with our purchase agreement, paragraph 24E, once the purchaser moves in, then that's it. Then any repairs and all that after the fact, even though they don't own it, all fall to the purchaser, which should be the case because they really are moving in to become the owner of the property. So just realize that they have to maintain all the property at the time, everything, landscaping, heating, cooling, everything falls then on the purchaser. This is a deposit that is, so the purchaser moves in. Of course, I haven't closed yet. That's why we're asking for a deposit. And it's an additional deposit. You don't have to place one, but I strongly recommend, certainly if the seller's going to let someone in, they need to have an additional deposit for the property to let them move in early. And then we have an expiration date. If for any reason settlement is not, does not occur, then purchaser will vacate and deliver possession of the property within blank days after written demand by the seller. And if they don't do it, then they get popped with a daily occupancy fee. So that's what that is. Okay. So I know I kind of scrolled through pretty quick, but it's pretty self-explanatory. We see these from time to time. What I'm really seeing a lot of is possession by seller agreement. I would say that 1 in 3, 1 in 4 of my closings have a possession agreement by seller. That is, the seller stays in possession after closing to have a chance to move out because it's a seller's market. Our closings are typically 3 weeks out. I mean, they're just so quick. And a lot of sellers are staying in possession or they're negotiating that, hey, listen, I'll sell you my house, but since I have multiple offers, I can dictate I'm staying in my house for another 10 days, 2 weeks, a month. And half of them are at no cost. And so that's what we have. So this is the possession agreement. Our agents use this, like I said, use this a lot. Just like the other one, you have it's kind of reverse. It's the seller remaining in possession. So you have the occupancy deadline, how long the seller can stay in the property to, and then whether or not there's a cost. And as I mentioned, some of these sellers are negotiating it's no cost. I get to stay in my house and you don't get it at closing, but whatever, 5 days, 10 days, and it's free. Some are not free, but you can negotiate that. And then it says if they vacate early, do they get part of their money back or not? If they don't vacate on time, then they start having to pay basically a penalty per day. During their time of the occupancy, seller still pays everything. Utilities, upkeep, maintenance, everything until they move out. Then we have a security deposit, of course, for the seller to pay, which they should, because they're basically acting as a tenant at this point after closing. And so money stays in escrow, typically with the purchaser's attorney. And then there's 3 days. 3 days for the purchaser once the seller vacates. Then the purchaser has 3 days to go in there and provide a list of any deficiencies caused by the seller, i.e. damages. Or maybe they left it as a pigsty. They have to give that list to the settlement agent within 3 days. If not, it's released. The deposit is released. If they give it within 3 days, then basically the parties kind of negotiate what the actual costs are, and whatever the costs are deducted from the deposit, and the remaining, if anything, is sent on to the seller.
Hey, Michael, quick question with that. So we just have to give a list. That's what I'm hearing from you?
Yes.
Just the list, not
We'll
the
list with the cost.
with the cost.
Yes.
It takes you a couple days to get a contractor over, like 5 days or something like that.
Yeah. So what you have to do is right over here. So they have 3 days, and you can see purchaser provide 3 days within 3 days after the occupancy deadline, a list of deficiencies. And all right, so you provide the list of deficiencies, but as the escrow agent, unless I have the actual cost, then there's nothing I can do. So that's why we need to have the cost and deposit necessary to pay purchase actual cost for sellers non-compliant. So I really need the actual cost. Like for instance, I just did a closing this morning. I'm holding $5,000, and I go over with my purchaser. Hey, here's the paragraph. You have 3 days to do inspection. Give me the list of what's deficient. Give me the cost if you can. If not, quickly give me the cost after. But you definitely have to provide the list within 3 days. But give me the cost as soon as possible, because that's what I need to turn over to the seller. And that's where I need to be able to pay you based upon the actual cost. And this is actual cost, so I don't just take verbal. I take, give me a copy of what it, if it's something you have to buy at Lowe's or a contractor has to come in. But you're right. So it doesn't have to be done in the 3 days, the cost, but should be done pretty quickly. So this way we can disperse the deposit.
I have a question.
Yep.
Does this form, I think I saw it, but it went quick, about who obtains homeowners insurance
Yes.
while
So,
in possession?
yeah. So by law, the homeowner's insurance has to be obtained by the purchaser because they're now the new homeowner. So that's what has to be done. Um, so we say right over here, possession agreement may impact the terms and conditions of purchaser's mortgage and or homeowner's insurance. So make sure the purchaser gets the homeowner's insurance, and then we advise seller they should get renter's insurance. So that's what should happen. So because since seller has sold the house, right? Because this is a possession agreement that says they've sold, they've closed. They no longer have an insurable interest as a homeowner. They're not the homeowner anymore. They're really a renter for purposes of insurance.
Okay, that makes
So
sense.
therefore, the homeowner, the new homeowner, the buyer must have homeowner's insurance as of the day of closing.
But the
And that's
seller,
anywhere, not just our form, but anywhere. I mean, anytime that the seller stays in possession after closing, make sure your buyer client has homeowner's insurance in place.
okay, thank you.
Okay. So those are our two possession agreements. Another form that is big for us is the as-is addendum. We have a lot of as-is closings, again, because I think the marketplace is just so competitive in some neighborhoods that people just do what they can to buy the house. And one of the popular forms, one of the way to get sellers' attention is to do as-is. Some waive the, of course, the best way is all cash. Another way is to waive the appraisal. Another way is to do as-is, and I call that the trifecta. If there's all cash, no appraisal, and as is, that's a pretty clean contract if you're a seller, and I see that from time to time. So there are two paragraphs that make up our as is addendum. One is for allowing for property inspection. And what happens with this is paragraph 16, which is the property inspection paragraph, is waived. So you would not do a property inspection pursuant to paragraph 16 and ask for repairs. Instead, this one would apply and basically says the purchaser has 10 days to go in and do an inspection. If they like what they see, they move on to closing. If they don't like what they see, then they can terminate the contract. So it's very similar to the optional paragraph in paragraph 16. That's what this first paragraph is. So it's the inspection for the as-is transaction. Now, I've also seen where sometimes people cross this off and then there's no inspection whatsoever. And that's okay. I mean, it's dangerous if you're a buyer, but you can cross off the inspection and make it super competitive, your offer, where you say, hey seller, not only am I paying cash or waiving the appraisal, I'm doing as is. And by the way, I won't do any inspection, which then leads us to the second paragraph, whether or not paragraph one is included or not. This is the as is paragraph. And this clearly establishes the as is nature of the transaction. So it says the parties acknowledge that the property is sold in as is condition as determined as of the date the purchase agreement, the date of the purchase agreement, excuse me. Excluding warranty of title, seller makes no representation or warranty express or implied as to the condition of the property or any system, equipment, or appliance therein. All clauses relating to the repairs of the property by seller, any representations or warranties relating to the physical condition of the property, including without limitation to paragraph 16, which is our property inspection, 24E, remember the equipment and systems that say will be in working order, 24F is well septic, 24G is termites. All those paragraphs are hereby deleted from the purchase agreement of no legal effect, so they're gone. Purchaser hereby acknowledges that the seller will not provide a well water test or septic inspection or termite report, and seller has no obligation to make any repairs to any appliance or any system, equipment, whatever. Nothing has to be done. So that truly makes this an as-is contract. So you would only use this when truly the purchaser understood what it means to buy as is. That means they could buy a house where nothing works and the roof is leaking. Is that legal in Virginia? Absolutely. Do I think people should do that? Absolutely not, but people are doing it every day. So this is the as-is addendum. Again, you can keep the inspection paragraph up here if you like, or you can cross it off, but that is the as-is addendum. Okay. Now we have a couple others. Escalation clause. I'm not a fan of escalation clauses, especially with buyer broker compensation. They're very hard to compare apples to apples. I've done a spreadsheet, try to teach off a spreadsheet. It's just almost impossible because of all the different components that go in with an as is. If you just look at price, but you don't consider whether or not broker compensation is being paid or not, or it's just really hard to compare offers when escalation clauses are there. But nevertheless, if you want to use an escalation clause, I think ours is a really good one. Of course, you'd put in how much you're going to go up each time if there is an escalation, but we have a price limit. So let's just say it was 500,000 was the initial offer and your client's ready to go to 550 and they're ready to go up in 5,000 increments. You go 5,000 for the increments right here. And since the purchase price was at 500, but not to exceed 550, this is where you put the 550. Okay. If any other bona fide written offers also include basically an escalation provision, then the purchase price set forth above shall be applied to the maximum escalated purchase price, net of seller concessions, and such offers, but shall not exceed the purchase price limit. So as used herein, seller concession shall mean all deductions or credits by seller, to a purchaser set forth in a bona fide written offer, including but not limited to seller paid buyer broker compensation, closing costs, prepaid, and lender points. Listing firm shall provide buyer with a copy of the highest bona fide written purchase offer, the time of ratification and delivery of the signed purchase agreement. Seller shall black out purchaser's personal identifiable information and purchaser's broker's information contained in such bona fide written offer, but shall not block out any other terms contained in the offer. Purchaser and seller shall confirm the final purchase price of the property by deleting the initial purchase price set forth in paragraph 4 of the purchase agreement and inserting the final purchase price as determined herein, and initialing such changes to paragraph 4. The failure of any party to confirm, insert, or initial the final purchase price in paragraph 4 within 24 hours of the other party's written request to do so shall be deemed a default, but shall not invalidate the addendum or the purchase agreement. And then let me go over two other things, and I will take any remaining questions on the forms we just covered. This is called purchaser's limited access to property agreement. It's where you want to give access but not possession of the property. So this comes up from time to time. And again, it's where you don't want to give early possession, but you're allowing them to do certain things with the property if you're the seller. So first of all, if you want to allow them to store furniture or appliances like they're getting a delivery, but you don't want to give them the key, you don't want to give them possession, but maybe allow them into the garage or the basement or first floor or whatever, this would allow them to store any items that the seller allows them to do. You would just write that in. Or maybe you want to give them access to measure windows or openings, whatever, or show it to their contractors, and you want something in writing about that, then again, this is the form to use. No work is to be performed to the property by purchaser or any of their representatives except as follows. And if there's nothing, you would write none, but it would also allow them to do some minor work if you wrote that in, or if there's any other entry that's allowed, you could write that in. I would suggest allowing for a deposit or including a deposit and an additional deposit for early entry and for storage. And you notice it could be paid to the escrow agent or directly to the seller. And it's perfectly legal to pay someone to the seller. And the reason we do that here is because they're storing stuff and going in, and it's okay to pay the seller. Like the others, they're not responsibility, like the possession agreement stuff. The seller keeps their own insurance until the closing date, and this is before closing, so it's the seller's responsibility for insurance, but the purchaser puts their stuff in there without any cause or holding the seller harmless. So in other words, the seller is not responsible if anything happens to the property while purchaser's property is in there. And if settlement doesn't occur, then purchaser has to remove everything within 10 days of the written request to do so. Otherwise, then the seller can use the security deposit to pay for any of their cost. So again, this is called the purchaser's limited access to property agreement if you don't want to do a possession agreement. So it doesn't give them possession, doesn't give them the key, just access for that limited purpose is set there. Okay. All right. So those are the major forms on the purchase side when it comes to the transactions for CVR MLS. And well, let me stop right here. Are there any questions on these additional forms that we went over? No. All right. Would you all like to see our listing agreement? Would that be helpful? I normally don't go over the listing agreement, but would that be helpful?
Yes, please.
Okay. So just give me a second. Let me open that up.
Michael, we do appreciate your time. Thank you.
You're quite welcome. Yeah.
Yeah, this is super great. Thank you for doing this.
All right. So I might as well also show you real quickly the buyer broker agreement because you may come across this too. So for our buyer broker, I think our boxes are really clean. So just to start off here, buyer broker, you insert the firm information, date, times, all that. And then for the compensation, we try to make it as clean as possible. Broker compensation is negotiable, not fixed, which is the disclosure. But we say here, for the services rendered under this agreement, broker shall be paid broker compensation equal to, and then you select. If it's a flat fee, a flat percentage, you put in percentage. If it's a flat fee, or describe other, for instance, like brokerage services agreement, anything like that, or combination, you just write in what you're being paid. Then it says after crediting any compensation received from broker from a seller or any other source, buyer shall pay the balance of the broker compensation to the broker. So we can't talk numbers here, of course, but say you work for a certain percentage, and remember we saw in the contract where you could ask for the seller to pay the buyer broker compensation. They paid all of the compensation, then the buyer don't have to pay any. Or if the seller agreed to pay half of your compensation, then half would come from the seller and the other half would come from where? The buyer. So it's really important to use a broker, buyer broker compensation agreement, buyer broker agreement that is very clear that if the seller does not pay all of the compensation is due you, that like here, it's crystal clear that the buyer pays the difference. And if he goes on to say, it's going to be paid at settlement. So it's really important to use a buyer broker agreement where that is clear that you'll be paid any difference by the buyer. As I mentioned this morning, the closing I did, the seller paid zero. So the entire amount of the broker compensation was paid by the buyer, and it was on the settlement statement for the buyer to pay because pursuant to the sentence. And of course, the buyer knew when they offered the property to the seller that the seller was not paying anything. They were okay with that. They continued with their buyer agent and they just paid their buyer agent at closing this morning. And that's what we did. So very important to have that for purposes of the buyer broker. This goes into dual and designated agency, which I think we're all familiar with. So I'm just going to save your time. Here's our listing agreement. And so for the listing agreement, I think the exclusive right to sell, items included, listing price and terms, I think all very straightforward. What the MLS is, what dual agency is and designated, and you consent or do not consent to dual or designated. So again, try to keep it nice and clean. We explain what dual is and what designated is. But then the next page, we get into the compensation. And again, trying to keep compensation very straightforward and easy to understand with your seller. So listing broker compensation, complete paragraph A below, also completes paragraphs B and C and or C if applicable. So for you as a listing broker, owner agrees to pay the following broker compensation to the listing broker for the services rendered to owner by listing broker. So you can put in a percentage or a flat fee or any combination, anything like that. Additional listing broker compensation for unrepresented, buyers. If selected, and of course you would select, Owner agrees to pay the following additional broker compensation, and this is in addition to the amount set forth in paragraph A, to the listing broker if the buyer of owner's property is not represented by a buyer broker. So for instance, you work for X percent here, and then the buyer is unrepresented, you could get some additional percent added to your X because the buyer is unrepresented if you choose to do that. Okay, and if the seller is willing to pay for that. Some of you have broker service fees, we call it, where it's like $4.95 or $2.95 or whatever to payable to the broker, and we call that a broker service fee. You can insert that right there. As you can see, we have nothing that goes from listing broker to the selling to the buyer broker, because I think that is very problematic. I think that is what all the lawsuits were about. So from a risk management, we removed broker to broker compensation a year ago, and we don't have it in our forms. But what we do is say owner paid buyer broker. So we put sellers on notice. A prospective buyer may retain a buyer broker to represent the buyer in the transaction to purchase the property. Owner has the option to pay some or all of the compensation due to a buyer broker. Owner acknowledges that owner has no obligation to pay buyer broker the compensation. If owner desires to pay buyer broker compensation, such compensation should be negotiated and set forth in a purchase agreement between owner and buyer. So we're putting them on notice, letting them know they can do it. It's not a bad thing for a seller to do. It's not a no-no. The seller certainly can incentivize both the buyers and buyer's agent by offering to pay, but where it needs to be is back here on the broker compensation. So that's how it works. So that's how the listing listing agreement and our purchase agreement work hand in hand. The seller says, oh, okay, I don't have to offer anything here. Nope. You don't have to put a percentage what's going to the buyer broker here. Not at all. You're just saying, okay, you know you have the right to do it. You want to incentivize them to do it. Great. You can do that. And then as a buyer's agent, our buyer's agents know you put in the compensation in paragraph 5 for the seller to consider. And the seller may pay the full amount. They may pay some of it. They may pay none of it. Most are paying something, honestly, is what we're finding, because sellers, again, want to incentivize buyers and buyers agents. So that's okay, but it's negotiated directly in the contract. And that takes all the liability off of you for trying to negotiate with as a buyer agent and trying to share the compensation of the listing broker. Just don't do that, because again, that's my recommendation to you from a risk management. And I can tell you, sellers love it. Sellers love to say, okay, hey, now I understand. I'm paying my listing broker X, and then they see that, and that's separate. That's just in the listing agreement. They love it. And then they come, okay, how much am I paying the buyer broker? Okay, that's in the contract. That's separate. It's really easy for them to understand that concept. And it's easy for our agents to explain it also. So that's what we're finding. And I think it's pretty clean the way we've done it, and, easy to understand. I'm not trying to pat our back on CVR MLS, but I think, it makes it very, very clean to understand, what you're being paid, and as a listing agent here in the listing agreement, and then what the seller will pay the buyer broker. Okay. All right, well, that's everything. Didn't mean to cram those last couple forms, but you guys have been a great audience, and I can see very well versed in things. So I wanted to cover the listing and buy broker forms with you, so you could kind of get the full picture of the CVR MLS form. So any other questions that I can answer for you?
In the listing agreement, when it comes to designated and dual, I guess what I wanted to see does it say that would work the same as any other buyer, whether it's within the company or not? I guess what I was trying to, when we're going over these contracts with our clients, it's clunky to just skip over what that amount would be. Because sellers don't really understand that the dual agent or designated agent is another agent within the firm, or myself as the listing agent. So it doesn't specifically say to Mr. or Mrs. Seller, this is also negotiated in the contract. Does that make sense what I'm saying?
Yes. So that's why I tried to help on the listing agreement here talk
Mhm.
about dual agency, it's two agents,
Mhm.
representing or one agent representing both buyer and seller. And then designated occurs when two different real estate agents affiliated with the same broker each represent a party in the same transaction, such that one agent represents the seller and one agent represents the purchaser. And so people say, okay, I get that now. So hopefully that helps. Quite honestly, it also helps some of our agents because agents have had a hard time explaining it. So they love it how I kind of made it very succinct on what dual and what designated is. And so with that, they're able to say, okay, then they go back to they go to compensation. They're like, no, this is just mine. If there's designated agent, I'm just your agent. If we're going to offer to pay the other agent in my firm, that's going to be under the contract. So the agent in my firm gets none of this. And that's the way
I
to
get
explain
that
it.
part of it. I guess what it's
Yeah.
confusing is somewhere in the form it says specifically that they'll get paid somewhere else. That's where the breakdown is in communication I find with my clients is that I can explain buyer broker and me getting paid very easily.
Right.
It gets hung up when it's a designated or dual that it works just the same. It's in the contract.
Yeah, we
It
don't have
does
anything else. We used to have those paragraphs, and that's what VR, when this for all the litigation blew up, we used to have a lot more. We've taken all that language out because we found it was more confusing, and we've kind of brought it down just to this one paragraph consenting to dual or designated, and we've removed dual or designated for compensation or any discussion and compensation about dual or designated. You know why? Because you're exactly right, Nan. It's the same whether it's an agent in your firm that's designated or it's another, as the buyer's agent, or it's an agent in another firm. It doesn't matter whether they're a designated agent or a firm at the other side. The only way they're going to get paid is what's negotiated in the contract. So we took all the language out about how they're going to get paid as designated because we found it confusing and unnecessary. So that's why there's nothing in here about duly designated because it has nothing to do with your listing broker compensation.
I guess that what I'm in
Oh,
paragraph 7,
yep.
it says that the buyer paid buyer broker compensation. The only reason why I bring this up is it just helps to have it where it says buyer broker compensation also created and designated and dual. Do you see what it's explaining it to the client. That's the hard part. When we're going over all the different possibilities,
I get
Right.
what
Yes.
Dan's
it's just
talking.
not clear where
Like,
the
well,
different
RDP
possibilities are.
Yes.
It's like either it's me, I get paid this, or you'll pay a buyer's agent. Well, the buyer's agent also includes those other things. So I'm beating a dead horse, Michael. Forgive me for it, but
No,
I
that's
find
okay.
it.
No, yeah, I understand your point. Yeah, in that case, if you become dual, and we're seeing less and less dual, but if
Yes,
you're dual in the purchase, then you just need to make sure in the dual, you actually put in whatever amount here, and then you're listing yourself as the buyer's agent up here. So therefore, you get both sides of the transaction.
right. And designated is
And
buyer's
designate,
agency within the same firm, but it just doesn't, you have to have two checkbox. Anyway, never mind. Go ahead.
yep.
It's the wording that I have trouble with when I'm trying to explain it to my clients.
Okay. All right. Any other questions that I can answer?
Do you really guys never see moisture in your area? That comes up a lot here when using your contracts.
See what? I'm sorry.
Moisture in relation to termites.
Oh, yeah. So what I tell people is to do any moisture or add it in paragraph 16 because moisture is not something that, the WDI report, which is the wood destroying insect report, there's actually nothing on there. They handwrite in moisture something, but that actually is an insect report. It's not a moisture report. And so shouldn't be relied on because a lot of termite people in the Richmond area don't do moisture. And they just do what it says, inspection of insects. So I tell people if you're gonna, tell my members that if you are representing a buyer and there's any moisture, you better have it inspected and make the request under paragraph 16, because that's the proper way to do it. Because you can't rely on a termite inspection for moisture, because termites are termites, moisture is something totally different. So you should really have, if you represent the buyer, the moisture inspection should be done pursuant to paragraph 16.
Okay, paragraph 16. Gotcha. Thank you for that.
Okay. Anything else? Sounds good. Charlie, anything from you? Okay. No, sounds like there. So, well, I want to say thank you so much, small group, but a lot of great questions. And thank you for participating today. And hope you have a really good summer and use the forms. And look forward to seeing you in any CVR MLS classes that I teach in the future. And hope you really enjoy using the forms. I put a lot of time to try to make them as good as they are. No one's perfect, but we do strive to have really good forms. So appreciate you using them. And anyway, so great seeing everyone. So y'all have a great day, okay?
We
Thanks, you too.
appreciate
Happy
you
Thank you.
sharing
So
them.
Thank you, Michael.
Yeah.